I hope you're well. I am so thrilled to be talking about this topic because I need to learn more about this topic, and we have a great expert here to help share his knowledge. Paul Bodnar is the Director of Sustainable Finance, Industry, and Diplomacy, FID, with the Bezos Earth Fund, which is the $10 billion philanthropic organization dedicated, and it's the largest one, dedicated to climate and nature. Welcome to
Thank
GreenBiz.
you. Great to be here.
Great. So in prepping for this conversation, I was looking at some of the latest data, and at the end of last year, the Climate Policy Initiative suggested that the flows of climate finance in 2021 and 22 were about 1.3 trillion. Great, that was about double the previous 2 years. Not great, we need about 10 trillion annually starting in like 2030 to get this transition really moving. So given that climate finance was such a huge topic at the COP last fall, where are we? How are we doing? Is that good? Is that not good?
Great question. Well, so actually, when we think about how we're doing, we actually need to do more than just ask this question about how the flows are doing, right? The world is on a carbon diet, and when you're on a diet, you can't just count the number of salads you're eating. You have to count the ice creams. So the equivalent is you can't just add up the green dollars flowing in, right? This decarbonizing the global economy is a story about capital stock turnover. It's about all the assets that the global economy runs on, from steel mills to airplanes to power plants, and they have a long lifetime, right? So when we're measuring how we're doing, we do need to measure how many green dollars are flowing in, but we also need to measure how much investment is flowing into the fossil economy and how we're curtailing the lifetime of the high carbon assets that we're locking in, and how we do that in a way that's fair to the stakeholders who depend on those assets.
So what does your context tell you then about that progress?
My context tells me that this community is great at tracking the green dollars and is doing a great job mobilizing green dollars, right? We see that that green investment is increasing every year, but fossil investment is pretty level, right? And so, again, every time you invest in a new fossil power plant or industrial plant, that thing is designed to last a very, very long time. And you're creating a very sticky situation for those whose jobs depend on it, the investors whose returns depend on it, the communities whose tax base and livelihoods depend on it. So that's why you have to pay. I think we're doing a good job on the green side, and I think that the private sector is good at building the green economy. And with a tactical role for the government. But the governments need to play a strategic role in phasing down the high carbon economy, and that's not going as well.
So in your background, which I didn't mention at the beginning of this, you have a very eclectic career. You have spent time, your most recent role was with BlackRock, and prior to that you were RMI. So given those levers that you just mentioned, where do we need to, we're doing a good job putting in, when do we need to start taking more out, and where does that, is it a matter of shifting that money, or what?
Yeah, we have to recognize the amount of money that's sunk into assets that matter to people, right? There's too much demonizing I think, between industry and the environmental community right now. It's like a fight to the death. And it needs to be a little bit more of a cooperative posture, because we need to recognize that even coal mines have value to, again, to workers, to communities. And so we need to recognize that value, but also be clear that we need to retire these assets before the end of their technical or economic lifetimes, but try to minimize the value destruction in the process.
So have you seen products that help do that, like to minimize that lifetime, to make it shorter?
Yeah, I mean, there's interesting experiments going on in coal, for example. There's ratepayer-backed securitization pilots happening all across the United States, where a utility collaborates with a PUC to retire a coal plant early and give that utility, a new power purchase agreement to deliver green electricity, and save money for the ratepayer and the taxpayer, who's the same person in a regulated power market. So there's been some interesting work there, but we really haven't started yet in other sectors.
Yeah, so when we look at climate finance, a lot of people talk about decarbonization, like this green, this thing, this green thing. What about what we need to fix, or how we need to prepare and be more resilient? Does that pool need to be expanded? Is that part of where we're going?
I'm really glad you asked that, because it's really striking to me that if you work on climate today in the financial sector, you're probably working on decarbonization, right? But there's this whole other piece to the puzzle, which is making the economy resilient to climate change. And people today generally think, financial markets, capital markets think adaptation, what is that? That's like a line item in a government budget, right? But it's not. It's actually a growth industry, right? Climate proofing life on Earth is a growth industry in the 21st century, unfortunately. But you can think of it like the healthcare industry, right? It's unfortunate that people get sick, but we do want to drive capital into that sector to innovate, whether it's drugs or other treatments. And so we need to start thinking about climate resilience solutions as a thematic, right? And this is really simple stuff. Water, pumps, air conditioning, wildfire analytics, engineering services. So I think that's the next wave of climate investment that you're going to see products designed around.
And is there a lot going there right now, or not enough?
No, it's a little bit of a blind spot for capital markets today, yeah.
Okay. What about the corporations in the room? Aside from philanthropy, what can they be doing?
Well, it is really remarkable to me how much corporates have actually taken the lead in a lot of areas. I mean, think of a strange and important frontier of climate like removals, greenhouse gas removals, CDR. It's amazing that market, that nascent set of technologies to remove carbon dioxide from the atmosphere is being powered by corporate philanthropy, right? So there are so many areas where companies have started to take the lead. And I remember when I was at BlackRock, I remember talking to one of the big tech companies that was spending a lot of time and effort and money on climate. And I was saying, why do you do this? Right? How do you generate shareholder value? Why do you would you be willing to spend all of your free cash flow on climate, even though you're a software company, basically? Right? And they had a great answer, which is, I don't understand the question. If we don't succeed in dealing with this problem, then we're not going to have customers who are willing to pay for our products. And I think that was a relatively enlightened perspective. And so I see the corporate sector moving ahead, but there's only so much you can do right on the side of your desk to buy sustainable aviation fuel or to pay for reforestation products. It's got to be viewed as part of your core business, so it's just going to be more relevant for some than others.
Some of the biggest wins that we've seen in climate finance in the last year have been blended, right? So we had the fund out of the UAE last COP, 30 billion, right? Altera. There's also Allied Capital Partners, which Bezos is involved with. Why is this approach important? Why are these blended models where we've got private and public money coming together? What's valuable about that?
Yeah, well, that model is particularly important in developing country, emerging markets context, because if you think about most of the investments that need to happen that are decarbonization related in those markets benefit from a combination of concessional and non-concessional, or public and private. You need the private to scale, and you need the public to seed and take risk. But the sort of open secret among those who work on deals in emerging markets is that public and private capital don't really work that well together. At a C-suite level, it's all happiness and honey at Davos and whatnot. But on a transaction by transaction basis, public and private capital see each other as partners of last resort. And blended finance is an attempt to solve that to some extent. So,
is it partners of last resort because it's just, there's no model for it and it's very bespoke, or?
No, it's because public and private financial institutions have different incentives, they have different decision-making systems, they have different cultures, right? Nobody on Wall Street gets up in the morning and says, today I really want to do a deal with, the African Development Bank or the Inter-American Development Bank. And the feeling is mutual. So in order to get these two kinds of capital to work together, highly motivated LPs will say, okay, we are going to do a vehicle. We're going to design a fund that's going to do more. We want to do more than one deal together, so we're going to design a blended finance vehicle that combines philanthropic or development finance with institutional capital. I was involved in designing one at BlackRock called the Climate Finance Partnership, which is an amazing fund, but it took a long time to negotiate those docs, right? And that's the experience in blended finance. Because public and private don't work well together, it takes forever, and that means each one of them is a beautiful artisanal creation that can't be just like replicated 1,000 times. Yeah.
So how do we get to where it can be replicated? Like what's the, when we were talking and prepping, the deal team for the planet, if you will?
Yeah. Well, I think it's interesting that, this problem of public and private working together, there is no sort of investment banking function in climate finance. There's no commercial locomotive in the middle that says, my job today is to drag these deals closer to financial close. And so I think we need that. We need that not at the little fund level, we need that at the level of the system. So we need the multilateral development banks and the big global banks and asset managers and regional development finance institutions to say, look, we're going to create a deal team for the planet. We're each going to put people into it, and that team their job is to get deals closed and structure them faster. So I think something like that will.
And so what would that look like in practice? What would the decision-making authority look like, if you will?
So I think that this is a human capital solution to a human capital problem. It's not like a big mega fund. It's a group of people who really know their home institutions, who really know where the bodies are buried and how investment committees think and how risk committees think, and are coming together. Like there's this scene. Have you seen the movie Apollo 13? Okay, there's this scene where like something breaks on the spacecraft, and in Houston, the mission director gets a bunch of people together in a room and throws a bunch of equipment on the table and says, you need to make this fit into this using only this, and you have 30 minutes or all the astronauts are going to die, right? That mentality is missing in climate finance.
So green banks here in the US have been talked about as part of the IRA and part of where we're going now. Could they potentially, what would that look like? Would that be something you could apply to that problem?
Absolutely. So again, thinking about climate finance as a term that's used most usually for developing country, in the developing country context. Right now, all the people who work on climate finance, most of us, and I say this lovingly, but are focused on fixing international institutions. Let's reform the multilateral development banks. Let's do this and this and this. We need to put developing countries at the center of their own story and their own development. And one of the great replicable solutions is the Green Investment Bank, right? We know that they work, publicly owned but commercially operated, usually the model. And so in my view, we should spend a little bit less time designing a 3,000-mile-long screwdriver from, London to Nairobi or whatever, and instead think about how we're building local financial capacity in these markets.
You see any models that give us a glimmer of that?
Yeah, there are probably 24 developing countries that either have green investment banks or mostly in the process of designing them. There's one in New York. There's a New York Green Bank. There's a Connecticut Green Bank. There's now a series of national green bank-ish things that we're pursuant to the Greenhouse Gas Reduction Fund part of the IRA program. There are developing countries that have green banks, including one in Rwanda and one in Southern Africa, the Development Bank of Southern Africa. There's one in Mongolia. So these are, but again, we tend to talk instead about how the World Bank should do this or that, or how the UN should do this and that, and I think we should turn that system inside out.
So one final thought for the audience here, what is it that they should take out of this room right now, like the thing that they should do to help start addressing this challenge and this opportunity, actually, I'll say it that way.
Yeah, I think we've touched on two things that I think are really exciting. A lot of people who end up working in this space end up focused on climate finance ends up being reduced to grid-connected renewables in developed markets. So I think two things that we've talked about that are exciting frontiers is one on structuring solutions to accelerate the early retirement of fossil assets. And the second is take a look at climate resilience solutions, the products, the services, the technologies that are in demand by households, companies, and governments in a warming world, and think about how to invest in those companies.
Great. Paul, we're out of time. Thank you very much for being here with us at GreenFin. Thank you very much. Please thank him.
Thank you. That was fun.
All right.